you remember, we talked about what the drivers are for everybody globally and for businesses in Australia, big and small, both the big end of town who are now required mandatorily to do climate change related financial reporting. But and as a consequence of the fact that we're all in that many people, many smaller organizations and businesses are in value chains for those companies, that they will also have to start to be part of this reporting regime and will need to do carbon accounting. And even if you're not, even if you're just a kind of standalone business, what's happening is that all the regulations and all the standards and what people expect from companies large and small are changing rapidly to become much more rigid and much more standardized. And the standard and the quality of what you report and what you say, the expectations of that are high, even if you're not part of a value chain. And the other thing we talked about was that even if you're not required to mandatory report, there are now carbon costs which are flowing through the economy. And I showed you an example of that. But it's now a risky world related to climate change, either from physical impact, and that can have impacts on companies, but also the transition, the decarbonisation transition brings with it a number of risks. And so it's for that purpose that at least at some level, whether you're a business large or small, whether you're a local government, that you should undertake carbon accounting to understand where you sit and what risks you have, but then also with risk comes opportunity. And there are many opportunities that you have as a small business if you understand the environment in which you are. They'll let you get an advantage to move into a space, offer products, offer services, get badging. And we'll talk a bit about the badging and those things next time when we talk about strategies and how you prove to the world you have one, which give you an opportunity if you move faster than your competitors. So it's partly risk aversion or risk mitigation, and it's partly opportunity capture. So I'll give a little bit of time in a minute because there was a lot of information last week. You've now had a chance to look at the slides. Hopefully you worked through my little list of questions because they were the kind of ones that you should ask yourself as an SME. And if you've got any questions about that, then I can answer those. But to preempt that, today I'm going to talk about accounting. And I'm sorry to say to you, but carbon accounting is, unless you're an accountant, of course, which means it's really a financial accountant, then it's really exciting. But for a number of people, financial accounting is not the most riveting topic on the planet. And as a corollary to that, or as a consequence of that, carbon accounting, which, because we're going to get down into the actual process, may not be that exciting for some of you. And the other thing it has is there's this thing called scary maths. So I'm going to expose you to it, but I don't expect you to actually partake. So I will in this as well. But it's important to understand just how complex this can be, and that, but also that there are set standards and set ways of doing it, just like in financial accounting. And so we don't all want to understand do the financial accounting, but we need to understand how it works. So in today's session, I'm going to take you down into the nuts and bolts of carbon accounting first and then carbon accounting, so that you understand the process. Whether as an SME, you then do that yourself or you get some help will depend on how necessary you see it. And I'll talk about that a bit more. So today is all about the how we do this to know where we are before next week we look at a strategy to get where we want to be. But because you are using this obviously to enhance your business or to promote your business, the new requirements, there are requirements we'll talk about next week from the ACCC and from ASIC, if you're covered by them, that you actually prove what you say and that you tell the truth. And so you must do your accounting properly and you must have it independently verified, just like your tax. But so this is the agenda for today, the timing. So we're already a little bit into this, so we'll probably have 5 or 10 minutes for questions. Then in the second part, I'll look at how you actually develop an inventory. Sorry, in the first part, how you develop the inventory, what the principles are, and these things called scope 1, 2, and 3, which have become really important. how you prepare for that reporting, and then some of the standards about that. We'll have a break for questions and a coffee for those who want to get that. And then I'll talk about, again, a bit more, particularly about the scope 3 part of how you do that accounting, what the impact is on businesses. And then as I did last week, I'll send home a little bit of homework for you to help you to unpack particularly scope 3 and what that means for you. So the objectives of this session: understand the greenhouse gas inventory development process, what the carbon counting and accounting principles are for scope 1, 2, and 3. What are these things, scope 1, 2, and 3? Applicable standards, the calculation methods, and the tools you can use. And then we'll look at how you do scope 3. So what I want to do now is give people a chance, either put it into the chat or switch on your microphone. Have you got any questions from last week's session that you'd like to ask at this stage? So we get a couple, 5 or 10 minutes for anybody who might have any questions from last week. There's already 4 questions in the chat though. All right, so now's your chance. As Jaya pointed out, I have a lot of experience at all different levels, and I've probably come across most of the thorny issues or other questions that you might have. And so now's your chance to get a bit of pro bono answers and response to clarify things for you, because the whole purpose of this is to make it as clear as possible for you as SMEs. Any questions, or are you such a great bunch of businesses that it made sense to you all? No? Yes? Can they speak, Joe? Is anybody trying to speak but they're muted? Joe, one was on before, so you must be able to. No? Can you confirm?
Hello.
Hello,
I have a
Joe.
question.
Yes,
Um, Chris, um, I guess you may talk about this later, but
I
I
will.
guess just to give you a discussion, just a thought that I have is about I have a large inventory, and with a range of products like that come from all different places and all made locally by, say, for example, men's sheds or people knitting and reusing fabrics, and then some are, made in China. Um, yeah, I mean, it seems like a massive an accounting job to do all of them. I mean, will there be methods going forward where there's like an average of something, or there's going to be a guide on how to come up with an average value?
An excellent question. A much deeper layer hidden in that simple question, which I was going to answer later on. Um, I'll preempt it now, I guess, because you've asked it, unless anybody wants to jump into the chat or with something more pressing about last week. This is actually a this week question. I was going to answer this going
Yeah,
forward.
no problem. No, that's
Um,
fine. Yeah.
so if nobody else jumps in, then I'll give kind of an answer now and give you more of an answer later. But it's an excellent question. And SMEs are kind of, as usual, the sandwich, the filling in the sandwich in this. But I'll talk about it a bit more later on. The answer is it depends. If it's simple, do it yourself. If not, you probably need some kind of tool, but at SME level, they don't exist yet at either complex with what you need in them or at a price you can afford. So, but I'll give you a way to handle that a little bit when we do the main session. This is a bit of a shout out to Small Business Development Corporation or state government or who others, Exchange of Commerce and Industry or others, that there is a real need to develop something that's affordable and usable by SMEs, but it's complex because SMEs are so different. As you pointed out, Joe, there's multiple products, then that's not an easy job. So I think we need to wait for the big end of town to shake through. They don't even have it right yet, and you'll see the complexity of scope 3 later on. So that'll take a little while to shake down, but I'll tell you how to handle this a bit later on, if that's all right. Excellent question, though. Any other questions at this stage, particularly about session 1 and why you should even bother to do this as an SME? Is it important? Did you all work through the set of questions a little bit? If you had time, probably too busy running the business. But if you did, any questions that came out of that? Oh, excuse me. I've still got a bit of a cough. No? All right. Seeing as we're actually a little bit behind time anyway, I'll move on if that's okay. Now's your last chance to jump in with a question. Otherwise, we'll get on with the business for today. All right. In order to do carbon accounting, which is to actually work out the financial impact of this, we need to do carbon counting. So we need to understand, and I'm not talking about the risk side. The risk side is a whole separate series of webinars around the physical risk and other kinds of risk, but just related to the carbon decarbonisation risk. This is a very good summary presented by excellent friends at the EPA in America as to the steps for the greenhouse gas inventory development process, and also at the end, what we'll talk about next week, which is around how you then prepare a publicly reported target and track progress, which we'll talk about in the series. But in the end, it's no different from financial accounting, really. You know, just counting your dollars, how much money you have in the bank, and how much you spent and how much you. It's all very similar, except there's a physical thing under this called greenhouse gases, and then you need to understand how many of those you've emitted in one financial year, and then multiply that by how much that would cost you by going into the air because of the carbon price, or if you're going to put some measure in place to reduce it, then how much that measure would cost you. The important thing to understand about this is that, as I said, and I'll talk about this next week, that there's an expectation that if you use this in any form to either inform shareholders, financiers, or just customers, that if you say your inventory was this, and this is how much greenhouse gases you emitted, you have to prove it, and you have to have it independently verified, and it needs to be against standard, and it should follow this process, which is why I'm going through this process. Whether you do that yourself and use a spreadsheet to do the initial one, or you have a whole package that does it, is a different question. But in the end, any verifier who signs off on this to say it's true, and you will need that, needs to see that you've got this process in place, which is why I'm kind of go through it. So, and a key part of this, and you do it step by step. Once you've done it once, it's really painful the first time. Sorry about that, folks. A bit like turning up to an accountant for the first time with a box full of receipts. Not that anybody does that anymore, but because they have them in Xero or some other kind of tracking package. But the first time it's painful, but once you've done it once, it's just a variation on that going forward and becomes much easier. The other thing you do the first time around is you do, excuse me, a materiality assessment, and you say, okay, these are the ones that really matter. I'm going to put effort into those. These ones don't matter. I'm not going to put much effort into those. I'll fix that as time goes on and as I'm required. So just be prepared for that. So basically, when you're preparing your carbon inventory, which is then your carbon accounting or your carbon counts, you need to follow these according to the standards, but these are the 5 principles that you must follow. And it's no different from financial accounting, really. If you dig deep down in financial accounting, it's very similar. And so as a small business, it's important that you think through this process as you do it, and you work out each of these particular things, particularly relevance. And that's why it comes back to those questions that I had at the bottom of last week's session about who is your audience? What is relevant to them? What enables them to make a decision about your carbon, how much carbon you've emitted, but also what the likely cost is for you when you're working out how to go forward and have a strategy to work out what the cost is. So the first one is relevance. Ensure that your inventory reflects the greenhouse gas emissions of your company or your business or your local government. And its whole purpose is to serve the decision-making needs of the users, whether they're internal for you to decide risk and opportunity, or external because you want them to see you as a company they should buy stuff from, either services or otherwise. And the relevance comes from that. And that then, so if so, in fact, this one overrides some of the other ones. And it helps you to determine that even though something might actually be a small part of your inventory in terms of actual emissions, but because your customers or your or internally you see that as important, then you go ahead with it even though it's small, because that's what they want to see. And you should do the large ones, but then after that, some of the small ones. And how accurate you get it also then comes back to your end users of that information, or your customers, or your local government residents, whichever one you are. So really keep that in mind as you go into this, because if it's not relevant, you're going to put a lot of time and effort into it, and for nothing, and you can't afford that. And if you're not sure, then ask your audience, ask your users, ask your stakeholders what they see as relevant. And that's part of the first process we'll talk about. It must be complete. So you must account for and report on all the greenhouse gas emission sources and activities within your chosen inventory boundary. And I'll talk a bit about the inventory boundary later, but inventory boundary nowadays is all of your scope 1, which is your activities that you do directly, your scope 2, which is all your electricity and maybe if you bring heat from somewhere else. But now your boundary is also all of your scope 3. So that's particularly your upstream supply chain, but in some cases it should be part of your downstream value chain. But again, once you've chosen which the important parts of that are, or the important steps of that are, based on relevance, you must account for and report all the emission sources and activities related to those within that boundary. And if you have some kind of exclusion for some reason, then you must disclose and justify that. There's nothing that verifiers and end users hate more than a gap, because then they don't know whether you're not disclosing it because it's dodgy, or you're not disclosing it because you didn't do it. Either way, they don't know. So the main thing is that if you think that if based on the relevancy, something is not seen to be important, then you just need to say, we considered this for this reason, it's not relevant, and therefore we've not reported it. So 2 things about completeness: make sure you get all of the relevant ones, but also disclose any specific exclusions or things you've not said. And when we talk a bit later about environmental and sustainability reporting under the ACCC Act and their expectations, the Australian Competition and Consumer Commission, one of the ones is that not saying something is as bad as saying something wrong. So you just need to be clear about that. Consistency, you need to use consistent methods to allow for meaningful comparison over time, because in the end, if you're a small business, you're wanting people to buy your product compared to somebody else. And so obviously you need the same rules. You're not comparing apples with oranges. And so the good news is that there are now clear standards for that to help you to do that, and consistent methodologies. There's less certainty around the scope 3 factors, and this is kind of what Joe was alluding to before, but they will clarify as time goes on as well. And as they become more significant for different sectors, those sectors will clarify those. So the important thing now is that the IFRS, the International Financial Reporting Standards Body, and the Australian equivalent, Australian Accounting Standards Board, because this is now financial and it's the same as the tax, for comparison of financial statements between companies and to pay your tax. They have clear standards now about how you do this. And so what I'm going to do is point those out to you. I don't expect you to walk away from today and head off and to do them, but you at least need to understand that if you're going to go down this path, that there are standards that you need to meet, and either you need to understand them and meet them, or whoever your service provider is for that they need to understand that. You have confidence that they understand it and do it according to those standards. Transparently document any changes to the data, inventory boundary methods, or other relevant factors in a time series. So keep also in mind that once you report this once, if you are reporting it as part of an ongoing strategy, you will have to do this semi-regularly. For SMEs, it's probably every couple of years, but anybody who's triggered by the mandatory reporting legislation will have to do this annually. And so, but then if you change something in your business activity, or you stop using some kind of thing that emits, or for some other reason, you have a change between how you did to the data or the boundary or what the method you use between this year's and the previous 2 years, you just need to point those out so that people can go, what? Where's that gone? I don't understand. Just the main thing about all of this is transparency and absolute clarity about what's going on. And a good example of that is that sometimes the science can change about things. And so I remember about 4 or 5 years ago, the Australian factor for methane and its contribution to global warming increased. And so the Australian government, who sets the factors for that, they changed that factor. And that meant that all of our customers at that point, or companies who were doing this, had to go back and recalculate all their previous inventories so that people could compare how they were doing against the previous one. So it's like if there's a change in financial accounting rules. All right. You just have to go back and do that. So be prepared also that I suggest that either you or your service provider do this in some kind of spreadsheet, or you do it in some kind of carbon accounting system, which is the equivalent of a financial accounting system, that you you do that way so that you can just make it easy to change factors and various other things so that you don't have to recalculate everything in tabular form every year. So set it up knowing that you have to make changes going back, but it also makes it easier to do changes going forward. So be consistent. Transparency. There's no sweeping anything under the carpet anymore. Whoever your target audience is will expect to see everything warts and all. And the job of the verifier, who you will have to have at some point if you make a declaration of any kind that's public facing to get more business, or if you're required, of course, under the legislation to report mandatorily, then the job of the verifier will be say, but normally a business like you has this, where's yours? Why is that not in there? Address all relevant issues in a factual and coherent manner and have a clear audit trail. And the expectation is that you would keep your audit trail, your data, and the report that you give and the link between those for 5 years into the past. Just in case, particularly if you're a big business. I know this is starting to sound like a lot of overhead for small businesses. This is where you make a choice. But once you've done it and it's in a spreadsheet form, and the main thing is have a clear trail, because somebody, just like a financial auditor, is going to have to start with what you've said and work back down to the raw data that underpins it, emission, liters of diesel from the car, kilowatt hours of electricity, gas that you've burnt while you're cooking your fantastic food product that you offer, or whatever. And then they have to do a set of random checks going all the way up that chain. So they have to be an audit trail with comments about what you were doing as you went through. Disclose any relevant assumptions and make appropriate references to the accounting and calculation methodologies and data sources that you used. The last thing you want is for the verifier to be saying, okay, you've said that this is the factor for natural gas that you've used, but it doesn't look like the normal one. Why are you using that one? Where did that come from? you've got a number at the end, but I can't see how you calculated it. It doesn't look right to me. So you need to have a report, which is usually what we call basis of preparation report. You don't need to go quite that fancy, but just a clear set of steps and at each stage how you did various calculations. If you put it into a third-party software package, then you need to make that clear and enable the verifier to have access to that so that they can follow your trail. So the main thing is you need to be very clear, just like you do when you're talking to your accountant and they report to the taxation department, or you're under financial audit, as to what you did and why. If it's wrong, that's okay. The verifier will say, actually, that's not how it should be done under the standard. Can you please go back and do this? And you do that and it fixes it. And then you go forward. So it's really about enabling that what you say can be compared by other people to somebody else who's like you. So have that available. And what you'll find is that you need to be able to defend this to that level if you're going to make a statement. And we'll talk about that particularly next week. And the last one is accuracy. Ensure that the quantification of the emissions is systematically neither over nor under your actual emissions, as far as you can judge, and that the uncertainty to reduced as far as practical. All right, so you just need to make sure that you've actually used accurate information for what you're doing. And in your first time through, you may not be able to be as accurate as you should be, but you should make a note of what data you need or what information you need to be able to increase your accuracy the next time round. So if your first calculation for the gas is, I don't know how much gas I use in my stove, then you can make an estimate based on some kind of technical information about that stove and how long you use it for the first time round. But if it's a particularly important one, you'll need some kind of other measurement later on. One of the things to watch out for is that if you're doing it in a financial year or an annual year, that electricity accounts tend not to line up with that. They're monthly. And so at the beginning of the financial year and the end of the financial year, you just can't use that month's numbers because part of it lives in the previous inventory and part of it lives in this one. So you need to be aware not to underreport or overreport as well. If data is missing, then the first year through, just say the data's not here, but the obligation's on you to have some kind of system in place to track that. And again, that means you need to file away as you go all of the relevant accounts, your water accounts, your gas accounts, your electricity accounts, your inventory. That should all, hopefully for some of you who are big enough, that's in something like Xero or some other financial system. But if not, you need to keep those ready, knowing this process will do. The other hint that I'll give you now is don't do it at the end of the year. All right. I know it's hard when you're running a business and you're doing things, but just like any other your financial accounting, it's best to do this as you go. All right. Don't leave it to the last year at the end because that tells you when things are going wrong. I haven't got the right data for this. I need to fix this up. Where's that account? Make sure you got all those things. And also, by the way, it helps you track to see how you're going compared to the last year. I'm using more electricity. Why am I using more electricity? I shouldn't be using more electricity. So it helps you to track your emissions anyway, helps you to work out that if you're going to come to the end of the year and you need a certain number of offsets, what that's going to look like and to factor that into what you do. So my advice is you could probably do this at least quarterly or monthly, quarterly, but not at the end of the year. As an SME, I wouldn't do it more regularly than quarterly. If you haven't using a platform, at least enter all the relevant data in there, but also file away the data carefully at that point so it's easy to get hold of later. And again, accuracy is one of these tricky ones because the whole point is you need to achieve sufficient accuracy to enable users to make decisions with reasonable assurance as to the integrity of that information. So don't go nuts and overboard on something that's small and not important to making decisions and at the expense of putting time into something that is actually really important and improving the accuracy of that. Do you know what I mean? So that's why you spend a lot of time at the beginning working out what's really, really important for those decision makers who are there, for those triggered by the mandatory legislation who are big enough, who are in the M stage at this stage. Then that's financial shareholders, stakeholders, and customers, and the government to some extent. Whereas for SMEs, it's really then who are your customers mainly, and what they think are important and what they need. So in your accuracy, make sure that also need to have a look at other businesses who are now similar to you in reporting and under the standard, whether that's something they're reporting, because customers want to easily look at you and say, okay, I can compare you with them around the things that matter to me. If they're trying to do some calculation or it's not there, then it makes it hard to make a choice, and they might go with the one that they can see and appears to be good and not the one that isn't. So these are the kind of 5 principles that inventory and accounting sit on. But I've explained the reasons why they're important. So if you're going to go down this path, which you would need to if you're going to make any declaration and use um, climate decarbonisation as one of your marketing tools or a thing that sets you apart, or to even protect you against increases which are coming, whether you're actually doing, sprouting this or not, which is the risk part of what I talked about, then these are the principles that you should use as you prepare your carbon counting and your carbon accounting. All right, how are we going for time? So we've got about another 8 minutes before the break. So the first step of this is get started, scope and plan inventory. So this is where you look at all the different standards for organizational reporting. I will talk a bit more about this in detail in a minute. There are a number of standards around that you can use. Not all of them are suitable for SMEs. And then as you get a bit bigger, different ones either are mandatorily applying to you or are helpful to you because you do them or do other ones like them already. So the key thing is, because this all hinges on that set of rules that makes everybody do it the same way. All right. So review the accounting standards and methods for your organizational reporting. For SMEs, I'm going to preempt what I'm going to say later. You should use the greenhouse gas protocol if you're a quite small company, because it's set up because it's very helpful. It provides lots of information. But the other thing you'll notice that is under the AASB S2 standard, which I talked about, which is the mandatory reporters, it actually says you need to use the greenhouse gas protocol. So that pretty much, it doesn't mean that's all you can use. Some people also would then use ISO, and some are required by the government if they're big enough to do ENGs, and all ENGs, people who triggers ENGs have to report mandatorily under that new standard anyway. So review which standard I recommend for you guys, unless you're medium to big, but either way, that you all have to use greenhouse gas protocol. Determine the boundaries, understand what you do, where you'd be required to report, which bit fits into your direct emissions, which ones fit into your electricity and indirect emissions, and which ones are your scope 3 or supply chain or value chain. And think through that carefully. And that's where we'll spend a bit of time later on today and your homework to help you on to do that. Choose a base year. And so you need to choose a year to start. And then if you're on some kind of pathway, some decarbonisation strategy to show that your customers and your stakeholders that you're handling your risk, that you're decarbonising at the right rate, that you have things in place, it's all relative to that starting year. And that baseline year is the one that you have to do and spend all the pain on to get that right, because the other ones are then compared to that. So choose a base year. You might start now. If you want to shout about something and spruik your credentials or get climate active certification or something, then you will need to choose a base year. That base year in some ways depends on how accurate your inventory is. If you do your inventory and you go, oh no, it can't pass verification or there's too many gaps, then you can't use this year as your base year. Use this year to learn. So you put in place enough data collection or enough calculation, understanding, or whatever it is you need. So the next year when you do it, because everything's done on either financial year or calendar year, it doesn't really matter. Those of you who are going to report financially need to do it on financial year because this is linked to your financial reporting. Everybody else can have their choice, but you do it for a year. And then once you have that base year and you're confident in the data, get that independently verified. And everything else you do going forward is then compared to that year. And you need to show where you made changes. At some point, either for your own peace of mind or because you are required to mandatorily report or because you go for some kind of certification about how good you are or not, or if you will need to get independent verification, third-party verification of your inventory. How often you do that depends on how big you are. If you're caught by the legislation or you're required by state government to do it if you're local government later on, then that would be annually. If you're an SME, you don't need to get verification every year. Even under the Climate Active for small businesses, you only need to have you need to calculate your inventory every year, but you really only need to have it verified every couple of years because it does cost you. And so, but at some point, it's just like if I'm going to buy a car, if I turn up to buy a secondhand car and the chick who's selling that says to me, don't worry, it was only driven by my grandmother. My cousin had a good look at it and he says it's all right. Will I buy that car? Clearly, I will not buy that car based on their saying so. I will get an independent mechanic who will give me a report which says what it's like. So it's the same here when you're talking about your carbon counting and accounting. And if you're triggered by the legislation, then the financial sector will want to know that it's been independently verified, just like they wouldn't accept your financial statements unverified, then they won't accept your carbon accounting unverified either. But keep in mind that carbon accounting, because it's linked to financial, if you're triggered by the mandatory reporting, or even if you're not triggered by it, but you're doing it because of risk or because of other stakeholders like local government, then it will need independent verification and assurance at different levels. So keep that in mind and understand that once you commit to this, you're kind of committing to doing that regularly. Otherwise, it doesn't make sense to the end decision makers. There are a number of processes for doing inventory and a number of standards. For those of you, most of you, this won't apply, but if you trigger any of the national greenhouse energy reporting thresholds, either on energy or greenhouse gas emissions, then you must do your NGES reporting anyway, but that's not enough to meet the legislation. So you'll have to do both. But it's a trigger for you that if you do trigger this, you will have to report in the first round. But it's mainly designed for the government's purposes and for big companies. It's not helpful for SMEs. So be aware that it's there for those of you who hit the M level and trigger NGES reporting and as the threshold for mandatory reporting comes down, then be aware that this exists and you may have to report on this at some point. The thing to note is that this is actually built on the greenhouse gas protocol, which is the one I do recommend you use. So you don't get anything different from that. It's just they have other things in there and other ways of doing things, which are for the government's purpose, not yours. And so it is slightly different, but it's all based on the same underlying standard. So you don't need to use this for what you're doing. As I said, it's not required for local government. SMEs, not either, only if you actually trigger the various thresholds, should you do it. There is an ISO standard. So for some of you, local governments or other MEs, again, medium enterprises, they will often have other ISO 14040 or other quality assurance standards from ISO. There is an ISO standard. And so if you wanted to use the ISO standard as well to be in line with your other ISO standards, you can. I will still recommend that there are parts of the greenhouse gas protocol standard that help you interpret this standard. And the thing about it is it's got lots of supporting documents, and I'll come back to that in a minute. So the standards, this standard can be used. Again, for SMEs, it's probably a little bit complicated, but if you're already an ISO registered for something, then certainly you can do it under this one. And that's legitimate because it's again based on the greenhouse gas protocol. So yes, you can use it, but not for most people. If you want to develop your standard, or if you're get a service provider to prepare it, then the new, as I said, the new AAASB standard says you must use the greenhouse gas protocol, just because that makes everybody on a common ground. I've always recommended that people use this because it's the best standard there is, and everything else it is built on this one anyway. And the beauty of it, as you can see in my slide, is that the standard is on the left, but it provides you lots of useful documentation and help. So the middle one has the scope 3, the one to the left is the scope 1 and 2, but then it has guidances, technical guidance for calculating with real calculations to illustrate how to do it for those of you who wish to embark upon this journey yourself. It also has various interpretations and additional information about how to do this. So that's why you should use it. It's also the most comprehensive one. So if you're going to, if you're going to, as I said, make any statement publicly about your carbon state, or you're required to mandatorily or for risk purposes, then this is the standard you should use. On the left for scope 1 and 2, and now for scope 3. And by the way, this is the only one which has a separate standard for scope 3. And that's what other people who use engines or they use the ISO standard actually use to understand the scope 3 already. Go to their website, just do a quick Google search will bring up greenhouse gas protocol. You'll find all of these different pieces of documentation in there. So yes, it's one the other standards are based on. It's the most extensive of support resources, and it's the most suitable for you guys in SME land. The other thing about this is that they have a whole bunch of other ones. So for those of you who are local governments, for example, or property developers, and you want to say I've developed a net zero or a carbon neutral development, then they've got a protocol for doing those community scale ones. For local governments who are always talking about the fact that we're going to decarbonise ourselves first and then the community, this is the standard you should use to calculate what that community footprint looks like so that you can then talk about how you're going to do this. All right, so that's one for cities and precincts. It has one for projects. So I'm going to build a new building and it's going to be carbon neutral, or it's going to be whatever. Then this is the one that guides you about doing accounting for projects, not whole companies. And then the one on the right is the life cycle assessment one. And that's the one that basically we talked about crossing the border into Europe. That's how you do a life cycle assessment for that. And it's also how you understand the amount of carbon and your liability or your risk in your embodied carbon. So in the things you build or the machines you use or whatever it is that is that part of it. So those are all there. First up, you probably don't need to use any of these, but just be aware that they are also there if you need them going forward. You might need the one on the right at some point, but the other two are there just so you're aware. So this is why we all love and revere the greenhouse gas protocol. So just very quickly, how do we do this? I've talked a lot about standards and blah, blah, blah. How do we do this? This is, if you like, a visual cookbook for the process itself. And this is one of the most important slides that I have in today's deck, because this lays out for you graphically how this process works. So the first step, as we said, is determine the scope and boundary. And this is what the standards refer to. So then after that, you look at your emission sources. What it is that's you as an SME or in your industry that actually emits greenhouse gases. And for this, these are industry specific. It's no use asking somebody who's a bakery and use their approach. You know, what are their sources? When you have a kiddies farm experience, you know, hug the animals business. So if you're in a different sector, then you have specific emission sources and you need to look at the advice for that particular sector. And in the thing I'll talk about on the right, the National Greenhouse Accounts, they have advice as to which factors and how you do, which sources are relevant for different sectors. If you're not sure, you'll need to get professional advice. It can get quite complicated. So determine which are the relevant, because remember, you've got to cover all the important emission sources and understand that each particular business or sector is different. If you're a travel agent, you've got different emissions. If you're a kind of services-based one to somebody who makes something physically, and if you do vacuum cleaning or some other kind of activity, then that's different again. So just be aware that you'll need to, it'll be different for each different type of business. But in the end, most of those businesses should end up with the same kind of emission sources. So look at other businesses and see what they're reporting on. And that's a good indicator of what you should use. Once you've determined the emission sources, you then need to say, if I emit one, if I'm burning 10,000 litres of diesel, what does that mean? That's just how much diesel I'm using. It's not emissions. So there's these things called emissions factors, and they are country specific and they're industry specific and they're source specific. So so for Australia, these factors exist. And so you take 1 litre of diesel, you multiply it by a factor, and that says if I burn 1 litre of diesel, this is how many emissions I've got. So those factors are obviously country dependent, country specific. In the terms of electricity, they're actually grid dependent. And then if you have a microgrid or something else, they're even more dependent on that. And they're sectorally dependent. And they're also process dependent. So and just so you're aware, there are two diesel numbers. One is for stationary diesel, in other words, gensets or running big engines, and there's one which is transport dependent. So if it's a transport one, obviously for the same litre of diesel, it will emit different stuff. So you just need to be aware of that, understand your sector, understand the different factors that apply. In terms of factors, that one I've given you on the right, the National Greenhouse Accounts factors, they are the Australian factors that you are required to use in Scope 1 and 2 for your calculations in Australia. If the factor does not exist in there, it'll be quite a specific industry-based factor. And for that, you'll need to actually get measurements or get professional advice to help you. The National Greenhouse Accounts factors has all Scope 1 and pretty much every Scope 1 and 2 you guys are really likely to need. And they have some Scope 3 ones, but be careful with those because those Scope 3 ones are in fact upstream ones for certain things. They're not the entire Scope 3. And so for small people like you guys, they're okay, a quick estimate of your upstream emissions for certain things, certain sources, but they don't cover a bunch of things. And we'll talk about that in a minute. So once you've done all of that, you've got all of those, you take your sources, you calculate how much you used of something, you multiply the factor, and that gives you your emissions. The thing to note about that is that you must calculate CO2 emissions and methane emissions and the N2O emissions. So there are 3 different types, and there are the fugitive ones like refrigerants. So there are actually 6 different categories of greenhouse gas emission that you must report if they're relevant. And what happens is that the factors turn the different type, methane emissions into equivalent carbon CO2 emissions. So all of them have factors to report as what's called CO2 equivalent. So if this was in CO2 terms, what would that mean? So you must count all of those and report them if they're relevant. If they're not relevant, then you don't need to do that calculation. But ultimately, you need to report against the 6 different types of greenhouse gases and use all of those different factors in your calculation. So I'll show you what that means in a minute, and I'll just quickly go on so we'll have time for a little bit of a break to ask any questions. Again, the National Greenhouse Accounts factors, the ENGES, and industry standards suggest which calculation approach. You can either use a factors one, or you can use an actual measurement one. So there are different approaches to this. usually at your level, you'll just use a factors one. And I suggest that if you're going to try this at home, because you think it's fairly simple and it is simple, then use this Australian National Greenhouse Accounts factors one. If it's more complicated, use the edges one or get professional advice. All right. So here's a quick example, then we'll go to questions. So I've just used an Acme local government because they use about 1,000 kilolitres of diesel, and that's not unreasonable for an SME if you're running around um, vacuuming dogs or washing dogs, or if you're running around in your truck to deliver goods, whatever. So this is an example of how you would do a diesel-based emissions. So you use about 1,000 kilolitres of diesel per year. In this case, to run generators, it might be, as I said, running your car or your truck around or whatever it is. And be aware that if it's a stationary one, like a generator, it's a slightly different factor to the transport one, but it's the same process. So you use this method to find the emissions of CO2, methane, and N2O because there's no fugitive emissions. So here's the scary math, folks. Sorry for those who break out into a rash when you see this. It's okay. There are good examples in the National Greenhouse Accounts Factor how to do this. If you're not sure, get someone to set it up for you and help you. If you are so inclined, you can use this factor, but it's fairly straightforward. It's basically how much of something have I used, which is the Q1 part, how much energy, equivalent energy, is in that amount of stuff I've used, and then in the process, how much of each of those three gases, CO2, CH4, and N2O, will that X amount of liquid fuel, in this case diesel, generate. This is actually comes out in grams, in kilograms. And because we always talk about tons, you need to divide that by 1,000 and report in tons. So where do I get these? How do I do this in real practice? Here's an example of that calculation. So I need the energy, I need how much diesel? So that's the 1,000 kiloliters. I need to know the energy content. So this comes from the table in the national factors for stationary energy purposes. It says how much energy per kiloliter of diesel there is. And then for CO2, it gives me how much kilograms of CO2 for each gigajoule of energy. For those trying this at home, the key point about this is make sure your factors are right. Don't feed in the liters of diesel into this equation. You must feed in how many thousands or kiloliters of diesel you've used, and that's where things go wrong. Be careful about the fact that you use the right factor or the right quantity as you feed it in. And then, of course, we did this for CO2. You do this calculation, divide by 1,000, and that says that in this case, this local government is emitting 2,671 tonnes of CO2 per year. From that kind of activity. So then you need to do it for CH4 and N2O, sum them all up and use that final number as your CO2 amount that you do from your diesel running around. Does that make sense? It looks a bit complicated at this stage. Put in a spreadsheet, look at the examples. If necessary, get someone to help it to set it up for you initially. Any questions at this stage? It's been quite complicated. And so I'll take 10 minutes or so for questions. I will come back to Joe's question as well at this point. But if anybody else has any questions, now's your chance. It looks a bit complicated. If you sit down, if you've got a fairly simple business, and for scope 1 and 2, and we'll talk about for scope 1 and 2 types of emissions, which I'll show you a bit more about in a minute, then it's relatively simple. And you can spreadsheet it, and you can do it on spreadsheet. If you've got a lot of inventory and you've got a lot of sources, then you will start to want to move the spreadsheet becomes more complicated, particularly for scope 3, and you might want to move to one of the platforms that exists. So coming back to Joe's question about whether you do it manual calculation or automated, it comes back to how many are relevant. The first time you do it, you might do it manually because it's going to cost you a lot of money to do it otherwise. But if you don't feel confident, then don't do it yourself. Get some advice at the beginning to set it up for you, either manually or in a system, and get a professional to help you through this because they'll do it much quicker and they'll know what's relevant and what's not usually. But if you think you've got a handle on that, then do it yourself first, and you'll find after you've done that, these ones aren't actually that relevant or they're not material or whatever, and you can just not spend your time on those. Either way, do it in a spreadsheet at a minimum, because as I said, you've got to track this from year to year. You may need to go back and recalculate because you discover something later on that you didn't do right the first time, or they changed the factor or whatever. And so you need to be able to recalculate previous years. And so that's best done if you've got a spreadsheet. There are increasingly numbers of platforms, as I said, which you just feed the data into, much like you can get taxation ones that do that for you as well now. Yeah, MyOb and various others can do that kind of stuff, accounting for you. It's up to you. They don't exist at a reasonable price point to the level of accuracy that SMEs need, in my personal opinion, yet. But that's your call. At some point they will, and you should lobby all the relevant people you can for the government to provide advice on this. Scope 1 and 2 is pretty easy. It's the scope 3 that's really complex. And when I talk about scope 3, I'll help you way through with this, but basically focus on the ones that really matter first. There's 15 categories. You could end up, as Joe pointed out, if she's got local people doing things, she's got 5,000, 200 products. It's all quite complicated. In the end, you come down to which are the ones that are most relevant for making a decision about you. Either you for your risk or your customer for whether to buy you. Focus on those first. And I'll give you a back of the envelope rule for which ones are relevant in terms of size. But even size doesn't matter because it's what your customers expect. And a good example of that is that if I run a transport business, then obviously my scope 1 emissions are important. But strangely enough, people who are looking at me will expect me to do my employees' transport emissions coming to work, even though that's really small compared to my huge fleet of trucks. Because I'm in transport, my customers seem to think I should take care of all transport. And so they'll expect a transport company to also do the emissions from goods coming to them, but their employees' transport. Whereas other people won't really require that. Does you know what I mean? And so for local governments, for example, people will often require your waste, whereas for a small SME, that's not actually that important. So the answer to your question, Joe, is that at SME size, you'll probably do it manually, but after a while, you'll understand, particularly the first time around, just to save money on working out what's relevant and what's not. After that, at some point, you get sick of that because you try and actually run a business, and this is taking too much time. And you might look to get some help, either the equivalent of, just like sending your books to the accountant. If you're the sort of person that does your own books financially, then you're probably likely to do this. If you're not, you'd send it to the equivalent of an accountant. But shop around, get a good deal. If you're an SME, don't go to the big end of town. And then also keep an eye out for any platforms that do this for you, and then move to an automated reporting system because they do make it much faster then. So there's 3 options. Do it yourself, hand over your data to an accountant, or start to use a platform which is the equivalent of a MyOb or a Zero for carbon. Did that answer your question, Joe? Oh, Kylie, sorry, there was a Kylie one. Kylie, did that answer your question? Any other
Well,
question?
it answers. Yeah, thanks.
It answered as best I could because it's dependent on you yourself.
That was good
Um,
advice. Thanks, Chris.
yeah. And the second thing to keep in mind is that if you're going to verify it, then also because the verifier will cost you, the more holes in it, and because you've done it yourself, the more likely it is they'll take longer and they'll charge you for that privilege. So it becomes a trade-off in the end. It comes back, the pragmatic choice thing about this is what are my customers or whoever's I'm doing this for, what are they going to decide? What how good does it have to be for them to make a decision? But the main thing is under consumer law, the moment you start to use it to give yourself an advantage in the market, then it must be at a rigorous standard and it must be independently verified. If you're going to spruik it on your link on your Facebook page or take out ads in the local newspaper, then you will really need to go through a full process. If you're just doing it for your own internal risk benefit, then maybe not. You can just do it in-house. Any other questions? I went through fairly quickly and I made the calculations look easy. For those, again, if you've got, you don't feel comfortable with those, get some advice from either a good friend who can do it. And these are the kind of things that an accountant could do if they really want to. It's not that complicated. But otherwise, just get some advice. The main thing is that everybody does it the same and making sure that you follow the different standards and calculations. Once we've got the amount of carbon, the next question is that if I've emitted 10,000 tons, or I've got 10,000 tons worth of CO2 from my supply chain, what does that cost? And that's where you need to have a decision about what your carbon price is. And that comes down to then, if that's being passed on, what is that person charging me for that carbon that's in their product? What's it going to cost me to reduce my emissions so I don't have them? And ultimately, there will be an actual out there carbon price that I will pay to emit that much. And that's what happens when products cross the border into Europe. So you come up with a reasonable number, because again, it's for your benefit. So what is a reasonable number for that? That's not straightforward. So you might want advice for that. Okay. How are we going? Any more questions?
Hi, Chris, I have first question. I don't
Yep.
know whether it's it's worth asking, but if your
I'm sure it
business because if your business is not required to submit this reports,
Yep.
but if you out of just curiosity and or out of just our wanted to just see how it goes. If you start working on this emission calculation and do this in one year statement,
Yeah.
would it become mandatory that you have to continue it even if you are not required as per the?
No, if you're
Okay.
not required to do it, and again, I'll repeat in a minute where you would be required to do it, and it's not just that mandatory reporting requirement. If you want to, if it's who's using it for that decision. So if you're just doing it to make your own decisions, then you can start it and not do it going forward. But again, it depends on whether you want to handle your risk or not. If you do it and you find there's no risk or little risk, then you wouldn't do it for another couple of years to see if there was. But if you identified that there was something you needed to track, then it's in your best interest because you're handling some kind of carbon risk or carbon cost risk. But there's no requirement on you to keep doing it. If you're obviously triggered by the mandatory legislation, yes, you must do it. And the other thing, though, that I was saying was that if you make some kind of claim about your current carbon state in the public domain, in promotion, in marketing, in publicity, or that you're on some kind of decarbonisation path, or that my product is better than your product, you must report as long as you make that claim. So if you say this year, my product is better than yours, then you only have to do it that year. But if you say my product is better than yours and you keep saying that year after year, every time you make that claim, you have to back it up.
Okay.
So you're required to do it, even though it's not covered by the mandatory risk statement, because this is what as I said, it's the second-hand car deal. And the ACCC are quite clear that if you make a claim and a customer buys your product as a result of that claim and it's false, then they can deal with you. You can actually be fined or penalised and taken to jail ultimately. Not that happens very often. So to answer your question, so the answer is that if you're doing it for your own benefit, then you can start and stop.
Okay.
But if you are making a claim in the public domain about it, or you're required to by some other stakeholder, as long as they require you to do that, you must do it. And what's more, you must have it independently verified on a sort of semi-regular basis. Because again, they can't take your word for it. So be aware of that once you start. But if you're just doing it for your own purposes and you want to see how you are against somebody else before you declare, or you make a declaration, or just to track your risk or whatever, you can start and stop whenever you like. But because it's not mandatory, but it comes back to the fact this is driven by risk and opportunity, and also now environmental declaration law, which is consumer law. So the moment you use this outside of your company, then someone makes a decision based on it to buy your product, or there's a financial benefit for you from it, then you must do this as long as you have that claim. And you must have it independently verified. Does that help? That's a good question,
Yeah.
but that's the
Yeah,
answer.
thank you. Yeah, okay, thanks, Chris. Thank
So
you.
keep that in mind, that if have already made a declaration for your product or company that you're carbon neutral, or that you're a bet you come buy our product or come and use us because we're less carbon emitting, then you must do this. So you may be best not to make that claim if you aren't prepared to do this going forward. And that's what people don't understand. And that used to be okay not to do that, but now it's tightened up because it's become financially linked, the same expectation as tax and financial reporting, and the consumer laws jumped on it for greenwashing, to prevent greenwashing. Then making a declaration about your current status or your future status around carbon requires you to do this and have it verified and keep doing it. Make sense? Excellent question, though. But there's nothing to stop you doing it yourself, and you would do it for risk purposes, at least to begin with. And the other thing, of course, is that your upstream, even though it's not mandatory, one of your upstream suppliers might want it. And they're going to want it regularly, and they're not going to take your word for it. So that's why it comes back to those kind of questions I put in the end of the first session. Why should I do this at all? What does it mean for me and my company? If the answer is then I should really do it because I need to for my company or my business, or there's either I need to because of the risk or because there's a real opportunity, then you're locked into doing this. Excellent question. Any other question? Oh, what's this one? If your business is not required to report emissions, oh, it was you. Yeah. Any other questions? That was a good question. Because there is overhead, and you're trying to run a business. We all understand. But it's just like I'm running a business, but I don't do my tax. That's not allowed either. So it's just one of those new burdens, one of those new expectations of you, I'm afraid. Particularly if you're going to use it to try and get an advantage or a leg up over other businesses like you. No other questions?
Another question there from Joe.
Where was Joe's? I knew she had one somewhere. To confirm you are required to do for a product from another stakeholder, does this mean you are tied in to do for all products, even if not mandatory? So if you are required to do for a product from another stakeholder, Okay.
Yeah,
No,
Chris, what I
the answer
mean,
is,
yeah,
I understand the
it's
question,
if
Joe.
you're asked, yeah.
Yeah, so that's why it comes back to, remember I talked about those relevancy. It's only where there is a particular stakeholder who's making a decision about a particular thing. You only have to do it for that bit. So it doesn't have to, and this is the thing, sorry, this is a good question. So the answer is that if you're required to do it for a product, then that's all you have to do it for. The other ones you don't have to do unless you choose to differentiate yourself with your market or whatever on those other products. But you only do that one. And this is the other thing where there's some confusion amongst people between doing it for my product and doing it for my company. Some people like to do the accounting for their whole company and to go carbon neutral or net zero, which we'll talk about later, for their whole company and its activities, but not individual products. Other people want to do it for products, but they don't do it for their company, and some people do it for both. Which one you do depends on who your audience is. If someone's just interested in the product, then you will do it for the product, which will pick up your company anyway. You can't have the product number without the company number, but you can do the company operations number without the product. Does that make sense? The embodied stuff in the products. So that's why it's important to understand, why am I doing this? If you're a service company and you don't, that's your product, then obviously it's a company thing. If you're, in your case, Joe, where you're providing goods, then choose the ones that are most important. And I have this discussion a lot with clients. They say, I've got 100 products. I say, what are your big products? What are the ones that actually matter? Which are the ones you make your most money from? Or which are the ones that you really want to hang on to? Start with them first, do them, and then you might move to the other ones. Does that answer your question? So the answer is yes, you only need to do it for that product. And all of this is driven by a need by somebody to make you do it. Does that answer that question for you?
Yes, it does. Thanks, Chris.
And that's why it's important you sit down and think, why am I doing it? Who am I doing it for? Which bits am I doing it for? Which bits are really important to do it for? Which bits are not? And does it make any difference to whether my customer buys it? If you're a water corporation, guess what? They can't go anywhere else. And so yeah, they're covered by other reporting requirements, and they will be covered by a AASB. But if you're the only provider of that product and people will only buy it from you and can only buy it from you, then it doesn't really matter either. But if you're in competition, then it does matter. Very good. Any other questions? We're kind of 10 minutes, a bit late. These are good questions. If you have any other questions, as Jay said during the week, flick them through so that we'll have another 10-minute Q&A at the start of the next session. All right. So what I want to move on from is this whole business of scopes. Nobody's asked me any questions about the difference between the scopes. From the greenhouse gas protocol, this is one of the best diagrams that will ever help. It will help you understand the difference. So scope 1 emissions are those where there is some kind of greenhouse gas directly emitted by things that you personally do. So if you've got a delivery truck and you take your goods around, the emissions from the tailpipe of that truck are yours. If you make baked goods or food, if you're a food products producer, then the gas from your stove, the fugitive emissions from your refrigerator, and the emissions from your truck that you move them around with, because they're directly under control. Anything where they're directly under control, you control the machine, you control the process. They're your scope ones. Everybody has to report those, but they're the ones you have the most control over. They can be, as I talked about, transport, they can be processes, they can be leaking things from fridges that have got leaky gas, and some other things. Scope 2 are those relate to electricity in particular, because obviously you use the electricity at your place, but it's generated in some coal-fired power station in Collie. If you didn't use electricity, the Collie station wouldn't emit the gases. So those are ones like electricity. Or if, for example, you bring across heat from another factory next door, or the case of central heating, where it's heat that's brought in, but the emissions happen somewhere else. Steam, for example, from someone else, then these are what is called the scope 2s. Again, you control that because if you can reduce that amount that you use, you'll have less emissions. You can change suppliers. So in electricity, I can take it from the grid, or I can install my own, or I can buy it from a renewable energy person. So again, you have that one. So those are scope 1 and 2. And that used to be what most people were required to do. Everything else is called scope 3. So this is what I call influence or empower. So these are ones where you don't directly control the emissions, but you can control the person who actually has those emissions. So couriers, so truck, transport, for example, I can transport in my own truck, and those emissions are my emissions. It's my scope 1s. Or if I get a contractor in to do it, I contract someone to shift my goods around, then I can't really say they must drive their truck fast or slow, that they can have an old truck or a new truck. I contract the service from them, but I don't directly control how they drive it and how they deliver my goods. The control I do have is that if they report their emissions at a certain level and I find another truck person who has lower emissions, I can simply not contract the other one, and I can contract the new one. So although I can't directly control the emissions in my downstream, I am responsible for who I choose. And because I choose a certain person, then I've got those emissions as part of mine. So that's why you have to do the downstream ones. The same thing is true of embodied ones. So if I rent a building, for example, then there are the direct emissions, but there are also the indirect emissions from that building. Or if I build a building, I get to choose which materials I buy, and I can choose between a high embodied material and a low embodied material. I can choose between wood and cement, or wood and steel, or between different types of steel, or I can choose something else entirely. So again, the scope 3 emissions are those where you don't do the direct emissions because you don't do the process, but you can control you can choose to use or not the person who does. And this is where you guys get picked up at some stage, because you'll be in a supply chain somewhere and someone will be making a choice about you. Are your emissions too high and ending up in my number as a scope 3? I'm going to look for an alternative. So the ones I call scope 3 influence or upstream activities are those. And then the other ones which are part of scope 3 are what we call downstream, and I call them empower activities. These don't end up in your number, but you need to know what they are because you're in someone's number and you're in their value chain. And how they use your product will force them to emit certain amounts. All right. So you need to understand how much emissions your product or your service is responsible for with your customer, because they wear the scope 1 emissions from using your product. And they also end up with embodied emissions from your product as well. And so they will wear those, and they will then start to want to compare you against a similar product and see if the similar product helps them to reduce their numbers because it's electric and it's not based on gas, for example, or whatever. So or it's more efficient than yours. And so they use less of something or whatever. So you need to know what that looks like to them, because if you don't, and you're different and worse than somebody else, you're not in the supply chain anymore. You just can't see your product. So that's why we have to do the upstream, the downstream ones as well, because it's about risk. And even though I don't have to count those, I need to be aware that somebody else is, and I'm reducing my own emissions from my upstream and my own emissions. But also I need to reduce my product. And a good example of this is that, in fact, you might increase your own emissions. So you might actually either have more embodied energy or you might use more energy to make a product which is actually causes less emission for the client. Do you understand what I mean? So you might make that choice that because you design a different one, but because the overall benefit to you and the customer is a reduction in emissions because they will use much less electricity or much less something at the other end, that you are able to increase your emissions to make something new or something different. Does that make sense? Because in the end game, it's your customer who matters. And if you can give them a product which reduces their emissions more than your increased emissions from doing your thing, then they'll buy your product over somebody else. So that's why we need to think about scope 1, scope 2, but down upstream scope 3 and downstream scope 3. So someone asked about double counting last week. The main thing about this is that this is all having the scope 3s in there and the different categories, which I'll talk about in a minute, has meant that it's all clearer and there is no confusion. There is no double counting because I'm saying these are the ones I have control over. They're my direct emissions. These are my electricity ones. These are my supply chain ones. And you're only responsible for reducing under the carbon neutral or the net zero pathway your scope 1, 2, and your upstream scope 3s. But you're also reporting the downstream ones so that your bankers or your shareholders or whoever can see your exposure. So the downstream scope 3 ones are risk related specifically, and whether you're still going to be in business down the track. Does that make sense? So, and therefore you report them. So there's 15 different categories. By declaring in the appropriate category, people see what level of control you have over that and whether what level of risk you have. And they can make that choice because it's very transparent. No, they didn't admit that, but because they're choosing that person in their supply chain, then that's a risk for them or whatever. Or because they're making their product this way and it has this set of emissions for their customer, they may be out of business in 2 years because that customer finds somebody else. Does that make sense? So which ones you actually have to offset or reduce and offset to claim carbon neutrality or net zero, that you're doing something about how your product or service is made and delivered, is scope 1, 2, and upstream scope 3. But because we're doing it to reduce risk or to get opportunity, if I can show that my product to my customer is better and gives them less emissions overall, then that's an opportunity. So what I call empower is you empower your clients to do better, and that's opportunity as well as risk. That's where you get your opportunity from. Does that make sense around the scopes? So what's happened in this whole process is, because it's everything everywhere all at the same time, and we're all focused on value chain now, that scope 1 and 2 were mandatory, and you could choose which scope 3s you used in discussion with your clients. Now, the requirement is that you will ultimately do all scope 3s. There is no choice. That ultimately by 2025, you will be expected to know the numbers for all of your scope 3s. And that's a sensible time frame because at the moment, not everybody's reporting, you can't get that information. So under the AASB requirement, it says you should use the greenhouse gas protocol to determine which ones to start with. The advice that comes from the greenhouse gas protocol is that in your first, by 2030, or in your first set of inventories, you need to get to the level to accurately report 67% of your scope 3 emissions, whether they are upstream or downstream. All right, so that's the kind of benchmark that you should move to quite quickly. Whether mandatorily or, again, the reason why that benchmark is there is because that's a reasonable level of risk. So that helps you to determine relevancy and where to put your accuracy. The first time you do it, you'll probably get nowhere near that. But that's why you do it the first time. Then you work out based on your first pass rough estimate, which are going to be my key ones. I will put a lot of effort into getting them right so that I've covered those 6, 7. And you might find that comes from one person or one product or one activity, or it might be a number of them. But in the end, you want to report all your scope 1s, all your scope 2s, and initially 67%. And engage with. Again, the protocol says you don't have to fix them and make them 0 from the beginning. You just need to engage with them to get their numbers accurately and to have discussions with them about obviously getting their emissions down on the same time frame as you want them to. And this is why ultimately somewhere, if you're in a value chain, you'll get that same call, because someone bigger is going to say, okay, this is my supply chain. I need this information from these people. And I've seen letters out there for clients who are SMEs, some of them slightly more M than S, who have received letters from their big clients who've said, dear supplier, can you please provide us with the following information? What is your greenhouse gas inventory? What are your scope 1, 2, and relevant scope 3s? Do you have a decarbonisation strategy and framework, which we'll talk about next week? What is it? And then the third one is, how are you willing to help us reduce our emissions by what you do? Okay, so that's scope 1, 2, upstream scope 3, and they ask about how you can help with the downstream scope 3. Sometimes they'll ask it mid-contract. Some of them may actually make it a requirement to get the contract. And I've got one client who's in the transport sector who actually won that contract because they said they would do those things. But it's coming to you at some point if you are part of a supply chain. If you're just, you have a niche group and you're only small and they buy your cakes or whatever it might be, or in Joe's case, they buy alternative greener things, then it might not matter. Does that make sense? So that's those letters are coming, and that's why this will eventually get there, because then the big people will have a clear, accurate number on their supply chain, which means our scope 3 numbers in general will get better because people have to measure them more accurately. At this stage, the first mandatory reporting period, it's not going to be good looking, even for the big companies. All right. But the expectation is that in the next couple of years, they'll fix that. And there is some leeway in the first 2 years where it's mandatory report, but the assurance levels will not be so high. Within 2 or 3 years, the big end of town will have to get to financial level assurance. And that'll come down the supply chain. So again, it depends on who your customer is or who you're doing this for as to what level they will expect you to get to at what time. But a ballpark figure for the moment is that you need to get 60%, 67%. Why they chose that number is partly their business, but that's 2/3 basically. So 2/3 of your scope 3 upstream emissions are the ones you should report and you should increase the accuracy of, and because that's where your risk lies, and that's a good handle on that. The most widely standard for this again is, as I said, the greenhouse gas protocol for scope 3s. What's the time? Again, that has a very good standard, and if you're going to go through this, it's very helpful. That's where I got the 67% number from. It has advice for interacting with your own suppliers, and that's the kind of interaction you can expect also from your customers. How you go about that, what accuracy you should use first up, how not to get bogged down by doing all the things and just to focus on the ones you need to. That's a very good piece of advice. It also then has technical guidance, how you do it technically, and it has examples of how you do the different calculations and how you determine things. That's also the one, of course, as I said, which is embodied in the AASB standard for scope 1, 2, and scope 3, which you must do under AASB. But again, if you're not triggered by that, that's what you should use as your model, because it's actually based on risk. It's how you handle your risk. All right.
But understand that this is not going to be pretty at all the first time you do it. Do the best you can. Again, this is also not pretty because unlike the scope 1 and 2, there are no standard factors for scope 3 in Australia. Right? And it's kind of a black art to find those factors. This is where you will need professional advice most likely because those factors don't exist in the public domain. They're not easy to find, except for the ones that are already in the national greenhouse accounts. If they're in there, they're rock solid. You can use those, but they don't cover a lot of stuff. So you will need to get access to someone who has those factors, and there's no one set of factors. What you'll notice over the next 2 or 3 years because of the mandatory reporting is that just like you got the national greenhouse accounts factors for scope 1 and 2, the government will bring out scope 3 factors, but it's a hard job for them because there's only probably 30 sources of scope 1 and 2. There's probably 500,000 sources of scope 3. So they will bring it out in terms of direct need. But there's still some good ways you can get even a back of the envelope number for that. And I run a whole course on how to sort, I've got in my Murdoch University course, I have a whole topic on what those are and how to find them and providing some of those. But it's not easy. But so keep that in mind. Have a go, see what you can get, and then you need some advice. So, as I said, each of these scope 1 upstream scope influence parts or downstream empower parts are broken up into different categories. And this is because you need to understand, because what you need it for is to know what it is and how I can reduce it. So just having one big scope 3 number doesn't tell you where the problem child is or where the big hitters are. So the Greenhouse Gas Protocol provides you with, in the end, 15 categories, some of which will be more relevant to you than others. But by reporting in these, by calculating and reporting in these different categories gives you an understanding of how more easily to reduce those particular emissions and where you should look and where the likely flow through of costs is likely to come from. So these are the 8 different upstream ones. Everybody will pretty much have something in purchase goods and services. Everybody purchases something or has some service. So almost everybody will have reporting needs for that. Capital goods. This one is really important because, again, although it may not emit directly, now because you have to scope all of the embodied carbon and things, then any capital goods that you purchase, you also will need to calculate the emissions from the embodied emissions from those. And why that's important is that as the carbon price kicks in, if I buy heavily intensive building materials, then the price of that carbon in those heavy intensity ones gets passed through. So it's not just emissions which are coming to me, but ultimately because the financial cost is being put in down the value chain, I'll be paying more for that because they've got to pay for the carbon. So it's to your benefit to understand the emissions from it to ensure that you actually pay less going forward. And if I stick with my concrete and steel current design, my costs are going to go up as I replicate that. So I may need to change my design. So some of you will trigger capital goods. Again, it doesn't matter. If it's a mix master or if it's a microwave oven and you put thousands of meals through it, then it becomes quite small. But buildings, it's again, what's the big capital item for you and how much that impacts your total emissions. Fuel and energy related activities, and this is broken up into 3 different ones. Some of these are covered by the Greenhouse Gas Protocol. So again, we all use fuel. You saw that the embodied carbon cost in electricity is passing through to you now. So that's why you need to count your electricity emissions as scope 2, and then put on the emissions for scope 3 for that as well. Because those costs will pass through to you as time goes on. as they are now. And you can then buffer yourself again. And you might find that, hey, I know this is going to go through. I'm going to get off the grid. I'm going to put in photovoltaics. I'm going to put my own system in. Yep. So that helps you make that decision as to when you should act to reduce your risk as well as improve your business look. Upstream transportation distribution, again, almost everybody will have that. Couriers, whatever, unless you yourself go and collect everything that's related to your business and you go and deliver all your goods, which some people do as SMEs, that's fine. Then they're all Scope 1 emissions. But the moment you order something in and that's delivered by a courier, or you take your goods out via some kind of third party, then you will have this one. And again, the costs, the carbon costs will go into the diesel and will go into their trucks and everything. And that cost will all get passed through to you going forward because everybody's counting it and it has a cost now. So you need to keep a track of that. And you might choose, if you're going to use a taxi service, to go via Green Uber or go via Green Taxi rather than another one. You might choose companies who are setting themselves up as being green because they're going to electric trucks or they're going to biogas or biodiesel or something else. It's a trade-off because they might pass on a lot of costs for that, but at the moment, they might be more expensive at the moment because of that. But ultimately, the conventional ones will overtake those in terms of price, and consequently, they'll be cheaper, and that gives you a chance as well. Here's a new business opportunity. Is there an opportunity for you to start one of these new green transport businesses? If you're going to be an Uber driver or a Didi driver or whatever the food ones are that deliver food, is there an advantage for me to be green or not? And that depends on the price structure. So that's transport, waste generated in your operations. This is important. People could say, oh, that goes to tip. That's their problem. It's not my problem. Now you have to count all of the emissions from all of your waste. Even if it's done by a contractor. If you do it yourself and you have your own landfill, it's Scope 1, but sending this off to the tip. And again, different tips and different councils and different commercial waste management people handle things differently. So here's where there's a lot of pressure on local government because you're dealing with people's waste and they need to get their Scope 3s down. You will come under pressure to do that more effectively. Yep. And you will have to you can pass the cost of that on to there. So even local governments are not immune who hold landfills because you end up as a number. People will look for alternatives if there is one, or they will expect a discount in your handling their whatever. So there will be in competition. So you need to do your waste. Most people have that. Business travel depends on the size, whether you should go in yourself or you don't. Employee commuting, usually not important for SMEs, except in some sectors. But if you're someone like a big company, like a FIFO company, then there are big emissions from flying your employees in and out of a mine site, for example. Yep. Upstream leased assets, we'll look at that in a bit more detail. So when you're leasing from someone else, then you need to count the embodied carbon in those assets that you're leasing from them, as well as the air conditioning or whatever that runs those assets. Because you can change location if they're too high and they end up in your number. So consequently, this is the question we talked about last week, and I'll use an example at the end for this. You will want to get out of premises that have high numbers. And if you're someone, if that's your business, you rent things, you lease things to people as your business, then be prepared that people will not lease your buildings because your number is too high. And the same with you. You might decide that, hey, I'm using too much electricity because of your horrible building. And that's driving up my costs because the carbon's getting worse. And by the way, it's making my product look bad. And you'll change its location as well. So just quickly, there's the downstream categories. Again, this is a bit tricky. There's a downstream, there's a downstream transportation distribution one. Again, some of you just take it by truck, which is fine. But, and if you use it, if you contract the truck to take it to the client, that's classed as part of your upstream. If the client gets someone to bring it from your place to them, and they actually contract the transport to get picked for your goods, then that becomes a downstream emission. All right. So if you pay, if your customer pays someone to come and pick it up and take it to them, it becomes a downstream emission. And again, it's important you understand that, because after a while, if you're further away than a closer producer, that cost may get too much for them, and they may actually switch, not use your product because the transport cost's too high. So you might decide it's time to start a production facility closer to them because of that. Processing of sold products. So again, if you sell raw material to someone and they have to put a lot of effort into turning into what they want, and they can get a product which is much less causing them scope 1 emissions, then they'll change products. So you need to consider how the product you provide, whether that makes less or more emissions with your someone who's manufacturing something your product. The same with your product. If I'm making toasters and mine's an inefficient toaster, then that becomes a scope 2 emission for my toaster user. If I make an efficient toaster, then they use less scope 2, and therefore they're more likely to switch to mine ultimately. So it's not just the raw products, but the actual products that are used. What does that look like to your user? End of life of sold products, because again, someone has to treat those as waste. This is where it ends up in their waste number. And therefore, if you make your thing out of something that's recyclable, it's easy to recycle, they get less waste numbers, they'll buy your product and not your competitors. Can you see how this is ricocheting down and it's all evening out and creating opportunity and risk for you? So it will force people to make better things which are more easily recyclable and use less waste emitting stuff in this. But you must also look at your downstream, the end of life treatment of the products you sell, because your customers will wear that number and they will ultimately switch from you if they don't like that number. Downstream leased assets. So if you're leasing your asset to someone else, then you need to understand how that asset's affecting them, and they might switch out of your asset if they don't like it. Franchises are interesting because those franchises are so locked into what they can and can't use in terms of products or whatever, how their stores must look, then you are in some sense dictating their emissions. So if you are a franchise, or you need to understand the emissions from what you franchise to your franchisees and the impact on them, because they may change franchisors ultimately if you're putting too much burden on them. And the last one is the investments. Chris, why are you talking about investments? Why do my investments matters? And who'd like to answer that one? Who'd like to answer why investments are important to consider? I'm just an investor. Why does it matter what the emissions of the things I invest in? And why should I report them? No? Everybody's off making coffee. Remember we talked about the fact that this is all driven by the financial sector. And they need to know the risk that you are to them. So you're on the other end of the book now. If you've invested in a company that's going to have a problem with this and is going to go out of business or is going to become unfinancial or whatever, then that affects your investment. So you need to look at what you've invested in to see whether they're a risk, just like your banks and the people who are investing in you are looking. And for some people, this is minor. For some people, it's major. If you're an investment broker or you're an investment advisor, or you are an investment company who's investing money on other people's behalves or your own family, you absolutely need to do category 15, because what you're investing in could be materially affected, and you shouldn't invest in them. That's also true, and that's a very good point, Pam, that you've made. That you're saying that your product is that you're doing the right thing, that you're lean and green, and then you're putting your money into ones that don't align, through investment companies, don't align with what you're saying. And there's actually been an ACCC case where that's exactly happened. That an investment company came out with a green investment product, but they were found to be investing in products like that. So it's both a direct impact, but it's also a reputational risk. That was a good comment, actually. Well done. But it's also the direct risk because the company that you're investing in or the business you're investing in has a risk, and that risk hits them. And so they either go to business or their profitability drops or whatever. So just quickly, so I've got time for a little couple of questions before the end of the session. So there's detail in the standard about what each of these category is. It's quite detailed. The standard goes into quite detail as to how to look at each of them. I don't expect you to take this in now. There's no test, but what I'm going to do, but it's laid out quite clearly, describes what you should do, what's optional, what's mandatory, what's in each of these. There's very good detail about these, and it's consistent across everybody who does it. The factors are not consistent, but what they should do and why they should look is laid out in the standard. I don't have time to go through this one, but I want you to think about this one at home. Here's an example of the upstream, downstream, lessor, leasee, who has which scope 3 ones under which category and why. Lease is a difficult, complex one, but you can work through it. And so consequently, if you're in that situation where you're a leasee, or more importantly, if you're a lessor, then you need to pay attention to that particular category. If you want to have a go at this and send me through via Jaya your what you think it is, or then I'm happy to respond what I think it is. But it's not necessarily always easy, and in fact, there's both. For this lessee, there is scope 3 upstream, and for the lessor, there is scope 3 downstream, all embodied in this type of example. All right. So lastly, what I want to do is I will put into the chat a exercise which takes you through this 15 different categories. And what I'd like you to do at home in your spare time, which you don't have because you're SMEs, but it's really important, is to work through these different categories. So I've given you a description of those categories, and I've given you a table or a spreadsheet, or a table which you can turn to a spreadsheet, to help you work through your different categories, where things should go, where things shouldn't go. And so have a go at that. In the end, what you're trying to do is come up with your major ones. So at the end of that process, that's helped you to understand what are my key scope 3 ones that I need to look at, then that's achieved the purpose. Determine which of those are likely to be material, either in size or relevance. Think about who should be involved in the analysis and decisions about what's relevant around those scope 3s. Then suggest to yourself there are 3 different calculation methods which are referred to in the standard. I haven't talked about those much, but have a think about which one you might need because you need to calculate it. And your system. Most of you will look at this question and go, what improvements can you make to your system? There is no system, it's all improvement. Some of you will have systems. So this helps you to understand what kind of system you need, whether you even need one. you don't have anything relevant or whatever. And then what questions do you have about inventory scopes and how to calculate them? Because you can come in the first 10 weeks of next session to ask me. So this is what I'd like you to do at home again, because it gives you the best outcome in terms of asking questions next time, whether you understand it, because next time's the last session. So I'm happy to stay on for another 5 minutes after this if people really want to do that, and I've got different questions, but there's 4 or 5 minutes for burning questions about scope 3. And in the meantime, while I'm waiting for those, I'll try and transfer across today's notes, but also that little exercise. If not, Jay will send it out independently anyway.
Yep. Yeah, this today's session was very heavy
It was.
knowledge transfer, yes, for everyone to grasp all in one go. But
But I can't
I
get
know,
around
like
that.
when you all start thinking about your own business or any business activities that you are involved with, like your friends, or maybe that will start generate some questions and ideas that you may like to share for the next webinar or the questions. I would say, like, if you have those any questions or answers for those 7 points, is it 7, 4, 5, 6, 6 questions that Chris has put? Just if you could send it to me so that I can give it to Chris to get the answers before the next webinar, if possible, or otherwise you can share it on that day so that we have some time to discuss. I think any questions will help other people also to think in that line. So it will be good, like, if you can, start thinking about your business and business that you work with to generate questions. That would be great. Chris, are you going to upload that one now?
I'm in the process of doing that.
Yeah, otherwise, I think last time most people couldn't download it. So if you can send it to me, I can
I'll
forward
send them
it
to Jaya and she'll send out the
yeah.
exercise and the PowerPoint.
Yeah, I think that will, because last time most people couldn't download it. Okay, so thank you so much, Chris. And is there any other questions? Otherwise it's time now. So we can end this second webinar, but the next one being the last one, I would say that there will be more questions and
And I promise
more
the next
time to think
one's,
about it. Yeah.
and I promise the next one's a bit more exciting. But we had to go through this accounting part. No offense to accountants, you do a great job, and we all appreciate what you do, and you're very good at what you do.
Yeah.
But the next one is a strategy kind of ones, and there's a lot of important aspects around what you can and can't say, and how you go about reducing your emissions and what you can say about it. And it's less formulaic.
Yeah, this being like in an early stage and not many people have started working on it. So there's questions and clarifications are also required, are also not fully developed. So that would be a reason for.
Yeah, but the main thing we need to take away is that it's now, or as boring and as difficult as this sounds, it's actually required now. Yeah. And it's of the same level as your financial reporting.
Yeah.
If you happen to go down this path, or you are forced down this path for reporting. So it's deadly serious now. And it's complicated and it's difficult. But so is financial reporting in general. So be aware of that this is the new world at some stage. And you can't shortcut it.
Yeah. So thank you so much, everyone, for joining, and thank you, Chris, for that wonderful depth of knowledge that you have shared. And I think hopefully if any of your friends or any of your business colleagues wanted to join the next one, please feel free to pass this on to them, the information, so that the next one would be the third seminar and the last of the series. But I know that would be really interesting. A good wrap up. Yes, Chris.
was that question about the single-use items from you, Jaya?
Yes.
Can you bring that back at the beginning of the next session, please?
Yes. Yeah.
Good question.
Okay.
Thanks, everybody. Great
Okay.
to see you. See you
Thank
next week.
you. Thank you. See you. Thanks, Chris.